Hello everyone, this is your daily market recap. Global markets have been moving cautiously as investors react to new economic data, AI-related volatility, and changing expectations around interest rates. While there are no dramatic swings at the moment, there is still a sense of uncertainty underneath the surface as traders weigh risks and opportunities. In the US, things have been mixed. The Dow Jones Industrial Average edged up slightly. The S&P 500 was mostly flat. The Nasdaq slipped a bit, mainly because technology stocks have been under pressure. Meanwhile, the Russell 2000, which tracks smaller companies, performed relatively better than large-cap stocks. This relative strength in small caps suggests investors may be looking beyond the biggest tech names for growth opportunities. A key reason for the calmer tone in U.S. markets was January inflation coming in lower than expected. That helped ease pressure on bond yields and strengthened expectations that the Federal Reserve might cut rates later this year. Lower inflation reduces the need for aggressive rate hikes, which generally supports stocks and borrowing activity across the economy. However, despite this positive data, weekly performance was still weak overall. Ongoing concerns about artificial intelligence and its impact on corporate earnings and broader economic growth continue to create uncertainty, especially in the tech sector. Investors are reassessing valuations and questioning whether earnings growth can keep pace with expectations. In the United Kingdom, the FTSE 100 extended its gains for a third consecutive week. The index has been supported by merger and acquisition activity and hopes for more supportive monetary policy. Mid-sized companies, represented by the FTSE 250, also posted gains after previous declines, suggesting improving investor confidence and broader participation across sectors. Across the euro area, markets have been slightly weaker in the near term. Major benchmarks recorded small declines as investors reacted to mixed economic data and uneven sector performance. Despite these recent dips, European equities remain higher compared to a year ago, reflecting broader economic resilience and relatively stable corporate earnings trends. Several key themes are shaping global markets. First, AI-related volatility continues to influence investor behavior. Technology stocks linked to artificial intelligence have experienced swings as investors reassess valuations and earnings expectations. This has led to sector rotation, with capital moving into financials, industrials, and defensive sectors that may be seen as more stable during periods of uncertainty. Second, inflation and monetary policy remain central. The softer U.S. inflation reading has strengthened expectations that central banks, particularly the Federal Reserve, may pause or cut rates later this year. Interest rate expectations play a significant role in determining stock prices, bond yields, and overall market sentiment worldwide. Third, global fund flows indicate shifting investor preferences. U.S. equity funds have experienced modest outflows, while European and Asian equity funds have attracted inflows. This suggests investors are reallocating capital across regions in search of diversification and potentially stronger relative performance. In commodities, oil prices have shown modest movement. Brent crude has been trading in the upper $60 per barrel range, while West Texas Intermediate has been in the mid-$60 range. Oil prices are influenced by geopolitical developments, production decisions, and global demand expectations. Changes in oil prices affect inflation, consumer spending, transportation costs, and energy company earnings. Other commodities, including copper and precious metals, have experienced mixed price movements. These markets often reflect global growth expectations, industrial demand, currency trends, and broader risk sentiment among investors. In cryptocurrency markets, volatility remains elevated. Bitcoin has been trading in the mid to high $60,000 range, while Ethereum is near the low $2,000 levels. The global crypto market capitalization is around $2.4 to $2.7 trillion, with Bitcoin accounting for more than half of the total. Cryptocurrencies remain sensitive to movements in technology stocks, shifts in liquidity conditions, and changes in monetary policy expectations. Overall, markets are stabilizing, but remain cautious. Lower inflation has provided some relief, but uncertainty around AI, economic growth, global capital flows, and interest rate policy continues to shape investor behavior across equities, commodities, and digital assets.